enjoyed the scones and jam and cream out there and whatever else you could find. We've got a pretty good program coming up now on copper and gold. It's certainly the flavour of the moment. And we're going to kick off with a project that's going really well up there in the Mount Isa area, Dan Thomas and Hammer Metals.
Thanks, Rob. Thanks to Phil, Des and the Equity Events team. Absolute pleasure to be here. I guess at the moment the room is packed and the mood around here is quite buoyant relative to markets. So a lot of people here obviously see the opportunity that I think I see in the current market and the current situation that a number of our explorers find themselves in. For those of you that haven't heard of the Hammer story before, as Rob mentioned, we're copper and gold exploration in the Mount Isa region. We've got some 440,000 tonnes of copper equivalent metal in a JORC resource already. We've had recent exploration success in the Mount Isa region. We've got a team that's been there and done it before. And we also have a nice gold and lithium project in Western Australia that we've had for a couple of years. In terms of the current situation, market capitalisation of approximately $44 million with $2.6 million in cash. It was a welcome relief to see that $1.1 million tax refund hit our account last week, which gives us some breathing room and some runway over the next quarter or so to do some more good work in drilling program, which is currently underway. When I look at projects and I look at junior explorers and I look at opportunities and mismatches between data and information, and I rewind 12 months ago when I sat up here and spoke to you all then, we had a share price of nearly 11 cents. Today we're trading at 5.5 cents. And I think about the story and what's changed over the 12 months. And in terms of a mismatch of data, we've had a pretty good year. We've intercepted more mineralisation at Kalman and we're completing a resource update as we speak. We've intercepted 4 different prospects, all grade intercepts, copper and gold mineralisation. 3 of those prospects have had less than 2 drill holes in them. So over the 12-month period, I'd like to think that the story has advanced and we have a clearer pathway towards our development aspirations in the region. In terms of where we are, we're smack bang in between multiple world-class assets. Ernest Henry, George Fisher, Cannington, Dugald River, all big scale, large tier 1 deposits, and we've secured some 2,600 square kilometres of tenure in that region. Don't just take my word for what a prospective region this is. Over the last 18 months, there's been some $1.6 billion in transactions across 6 or 7 different assets in the region. So obviously Ernest Henry transaction makes up the bulk of that, with Evolution purchasing that about 18 months ago. The Little Eva transaction, Copper Mountain selling that asset for $350 million. Round Oak transacting to Aeris Resources. The White Range Copper Project with Fetch Metals. Mount Oxide and the Great Australia Mine transacting with Duke, or proposed to transact with Duke. And AIC, who presented earlier this morning, acquiring D Metallica, the old Minotaur assets in the region. All of these transactions show you that people want to be in Mount Isa, they want to be exploring for copper and gold. And we've taken a decade to build what I think is a quality set of tenements in the Mount Isa region, underpinned by some 440,000 tonnes of copper equivalent metal. As I've said before, our aspiration is to get that to 600,000 tonnes of metal, have a robust development option in front of us. And I think with the work that's going on in this region, with our own prospects, our neighbours' success, I think people can start looking at the area in which we're exploring as a 1 million tonne copper district. They are the types of districts that people want to be exposed to and they want to be exploring in, and they want to be developing assets for a multiple generation set of mines. So that's the agenda and what we've got. I mentioned Kalman. The Kalman project itself, you can see here, last JORC resource was done in 2016. It was done when the copper price was $4,650 per tonne. Molybdenum prices were $22,000 a tonne. What we did here last year, you can see the purple areas here, or the lilac colour. This is a zone of mineralisation that we thought existed in the deposit but wasn't included in our resource. We drilled 16 holes into the lilac area that sit within an open pittable depth to surface. We drilled holes in there and we extended the mineralisation known at Kalman. So we're in the process of including that new mineralisation into a resource update. And in addition to that, we'll obviously be looking to refresh metal prices. Kalman's a weird mix of copper, gold, molybdenum and rhenium, and it's pretty unique in terms of an asset. And people talk about the copper opportunity that exists today, and I think the copper at Kalman is exceptional. And when we previously modelled this project, about 60% of the revenue came from copper and gold and 40% came from the molybdenum and rhenium. Again, in terms of a mismatch opportunity versus share price, the molybdenum price this year in just 3 months has doubled. It's gone from $45,000 a tonne, which was high. It's exceeded $100,000 per tonne over a critical shortage in the asset, in the metal, in inventories globally. So when we start looking at the Kalman project today, probably about 65 to 70% of the revenue would come out of the molybdenum and rhenium. The other 30% would be copper and gold. The last time we modelled this asset, rough value per tonne of ore in the model was roughly $85 per tonne. Today it's $230 per tonne on spot prices. So you can see a significant difference in this deposit in the space of 6 years. Now, spot prices won't prevail over a longer term. They'll always revert back to some sort of forecast commodity consensus price deck. I still think that these will be well in excess of the 4,650 per tonne and 22,000 per tonne moly that we modelled this project on. So I think there's tremendous opportunity at Kalman, and I think it hasn't been recognised so far in our share price or the movement. Molybdenum, what is it? Some people can't pronounce it. It's a metal that not a lot of people talk about. How is it utilised? It's perfect as an alloy. It goes into a lot of our stainless steel. It's got incredible heat resistance. Traditionally been used a lot in oil and gas pipelines, strengthening and hardening steel and making sure the safe production of oil and gas. But it has a really important role moving forward as a critical mineral in terms of its ability to harden steel, used in wind farms, used in solar panel backings, used in new electric vehicles. So there's an opportunity to use molybdenum moving forward, and it is increasing the consumption of the metal. Current projections suggest there's about a 90,000 tonne shortfall over the next 3 to 5 years in the market, which again gives some comfort that molybdenum prices will remain strong over that period of time. Great opportunity. Kalman is the 3rd highest grade undeveloped molybdenum project in the world. The other two, one's in China and the other one's Chinese owned here in Queensland. In terms of exposure and investment opportunities in molybdenum, especially in development projects, there aren't many around. But a fantastic opportunity if you are considering molybdenum as an alternate investment. In terms of the work we did at Kalman, I mentioned we drilled some holes to the north, all fairly shallow mineralisation, and we put these intercepts out in February. Fantastic results, 25 metres at approximately 5% copper equivalent from a relatively shallow depth. Nice broad intercepts too, fairly shallow depths, 4 lenses of mineralisation spread across about 100 metres of width, makes for a nice ore body to be mining. The deposit is still open to the south, some fantastic grades of mineralisation at depth, and an opportunity again to pick up the ore body to the north where the geology looks similar but mineralisation cut out at the end of the last program. We're undertaking some EM surveys here at the moment and we'll look to extend the mineralisation to the north. In terms of that new mineralisation to the north, you can see there the lens of mineralisation sitting out to the east of the deposit where those intercepts were made, and that extends that deposit at the north in that 4th lode. I mentioned our exploration success in those ore grade intercepts that we had last year. Number of prospects down towards the south around the Mount Hope region. South Hope, 25 metres at 2.4%. Mascot nearby as well, 6 metres at 2%, and Mascot Junction, 6 metres at 4%. All of those prospects less than 5 drill holes in them, and we'll be back there drilling those targets in an upcoming program. Hardway, another area, was part of an old mining lease, got incorporated into Hammer's portfolio last year. We drilled the first known drill hole underneath those workings there, and in the first hole intercepted 30 metres at 1.1% copper with a nice zone of heavy rare earth mineralisation there as well. We're still getting to understand that deposit and the potential. We're drilling at Hardway at the moment, looking to extend these intercepts, and that should provide some strong news flow in the coming weeks. That Hardway deposit, what does it look like? You can see here the old workings worked over 30 to 40 years ago at various stages, pulling out high-grade copper mineralisation. Not a lot of geological work went into there. You can see the soil anomalies sitting down there at the bottom of the page. 500 to 800 metres in strike length extent there, with very little drilling underneath the main workings. Our current working theory here is the mineralisation that we intercepted in the first hole at Hardway was in a zone of what looked to be depletion. So we're searching underneath this oxide layer looking for a supergene deposit, hopefully with some nice sulphide intercepts at depth. At the moment we've got around 8 to 12 holes planned here, and we, being in close proximity to the main highway, we've been able to gain access to this property despite the wet weather events in the region. Mount Hope, a lot of you might be familiar with Carnaby Resources and the exceptional drilling that they are getting at their Nil Desperandum and Lady Fanny deposits, as well as Mount Hope here in this little red box. The lighter colour areas you can see here are 100% hammer-owned properties. I mentioned the intercept that we had at South Hope at 600 metres to the south here. Mascot and Stubby just sitting out here 5 kilometres to the east of Mount Hope. So we have a very good land position in and around these discoveries, and it was only at the end of last year that we really turned our attention to the potential down here and some of our prospects in the region. Access to this region for us has been a little bit more difficult this year. We've been hoping to get on the ground and do some fixed loop EM surveys down here. That work has been held up with the weather. We're waiting for the team to get back into the region and complete that work before we get onto a new drilling program down here in the coming weeks and months ahead. In terms of our drill intercepts, here they are on the graph. You can see where they sit on the picture. Nice proximity, nice ground position in a highly mineralised region with lots of activity going in the area. I'd be remiss not to mention our West Australian gold project that we've had here for some time. We did a soil survey here this time last year, and we had some very interesting lithium anomalies that popped out amongst a number of gold and nickel targets. We were looking to do an air core program here in the second quarter of this year, and in terms of that prospect and the lithium prospect, one thing that you won't pick up on this map is the location of Kathleen Valley. So Liontown's lithium project sits over here on the other side of what is a fairly large granite unit. So we're on the eastern side of the Kathleen Valley granite, and when we had those lithium soil anomalies, we went out and we had a bit of a look at what we had within the area, and what we found to our surprise were a number of pegmatites. Sitting just off the granite, running into our prospect here that we drilled for gold at Aurelia. When we went and had a look at the bottom of hole geochemistry, the only samples that we submitted for multi-element geochemistry, we found a number of samples, 200 to 300 ppm lithium at the bottom of the hole. So this is an area we hadn't considered prospective for lithium before. We've identified the pegmatites. They look fractionated granites. They look like the right type of pegmatite units to host lithium results. It's on the other side of the Kathleen Valley granite where there is a world-class lithium deposit. So this is an area that is well worth exploring a little bit further. The other thing that complicates our exploration historically in the region is we have drilled for a north-south gold system. So we've drilled with east-west holes. All of the pegmatite units run east-west. So we've been drilling parallel to these pegmatite units. So the probability of intercepting them is relatively low. So when we come through and we do our drilling program here, we will look to drill to the north-south and hopefully intercept those pegmatite units. In terms of upcoming activities and what do our shareholders have to look forward to, I mentioned that drilling program which has got underway this week at Hardway. So we'll have news flow coming out of that. We have that JORC resource update coming from Kalman. I expect that to be out during April. We're putting the finishing touches on that at the moment. We've got a bunch of work around EM surveys, a number of fixed loop and downhole EM surveys to be completed. We also have a program that we're completing with our JV partner Sumitomo Metal Mining. That works in the final year of an earning program there, so there'll be some activities out of that program to look forward to this year, including some drilling at a number of new prospects that we've defined in the area. And in summary, that's what the timeline looks like moving forward. We've got established resources in a prime jurisdiction that has a lot of regional interest for a number of different players. We've got multiple high-grade copper and gold targets that we're looking to put the second, third and fourth drill holes into. A number of these targets take some time to develop. We'll be looking to drill them later this year. We've got joint ventures with Sumitomo Metal Mining and also Glencore in the region. And as I mentioned, we have got a team that's committed to replicating the past success in one of Australia's most prospective copper provinces. We're around at the booth. I'd encourage you to stop past and ask any questions that you might have. Thanks for your time and enjoy the conference.
that was a great speech by Dan, and in particular the molybdenum. Well, we've got to keep an eye on that one as sort of one that skips under the radar, but that price looks exciting.